Now let's have a look at the asset management businesses with respect to bonds and alternative assets. Gerbrand, let's get your opinion here.
In this specific space, size certainly does matter. We know that if one of the bigger other players, Stanley, they're probably the best in the space because they're the biggest in that specific industry. So I think from that perspective, on an offshore perspective, you're probably looking at Investec, the better one out there. But I think on a local perspective, Mark Leroux and his team is certainly doing a very good job on the cash and the bond funds at Coronation side as well.
So you obviously have to break it up into local versus global here.
Yes, and also you've got to understand that the bond funds generally attract much lower fees because there's not that much that's exciting about bonds. Bonds are terrible. We should never discuss bonds on this show. But it's because there's a primary issuance market, when sovereigns or other corporates are issuing bonds, and then they normally get put in the shelf and then they never trade again. A little bit of turnover, so there's a little bit of smarts, so it's appropriate that it attracts a lower fee. The alternative asset area is interesting though, because that's the sort of domain of hedge funds and so on. And there the fees are very high, 2% of assets, 20% of performance. The asset managers absolutely love those mandates. I can't understand why anybody who is in a sane mind would give somebody managed money on a 22 and 20 kind of fee base. But having said that, there's still plenty of fund demand for that sort of stuff out there, it seems.
In terms of, do we go straight to who's edging ahead here?
Well, I don't know. I think what one must understand when it comes to asset management is that there's another big bogey that I think should be out on the table for us to talk about here. And
we'll trust you to put it out on the table. I don't think you're going to hold it back.
Gerbrand alluded to it here. There's a lot of things that happen in this industry where rock star asset managers start to attract attention. But in truth, we know that one of the big global trends is the move towards ETFs. And it's because outperforming the index is hard because of that natural survivor replacement thing that happens in the index. So, in institutional asset management, I think those people ought to be more worried than they are about the threat posed by low-fee ETFs. So that's another reason why I would be slightly cautious about the high margins in this space.
I think that's certainly one of the fears out there. In South Africa, that hasn't gained that much traction than on the offshore side. But certainly one of the other things is of course the high performance fees and market related income that these guys do earn. If you think markets have ran hard over the first 4 or 5 months of this year, you saw that in Coronation's results. They're actually doing, I think, 89% better profit than last year. That's mostly due not only to inflows. I think inflows probably account to about a third of that, but certainly I think the other 50% certainly on performance fees, and we know what the market's done from August until now. It's probably about 20% up, and that's why these guys are printing money. If you expect the same old story to continue at more expensive markets, then your choice.
At this point in the show, who is ahead, taking into account the equity asset management side and the bonds and alternative investments?
I must say, I think Coronation are going to continue to attract more money. So I'm very positive about what Coronation has done, notwithstanding how that share price looks behind us there. That looks like
makes it very expensive.
The ski slope at Wild Waters in Benoni. It is just incredible slope.
You can tell us all about the ski slope at Wild Waters in Benoni in a moment. We're interested. Gerbrand, do you agree with Paul?
I think from a business perspective, certainly they are ahead of most fund managers in South Africa, and they certainly are in front of Investec at the moment. They've attracted, I think, double their assets in the last 2 years. So certainly what they're doing is they're doing it right at the moment. They have closed some of their businesses for new inflows.
Can I throw in Alan Gray into the mix here? I know I deviate from the format of the
it's
show.
It's Coronation's biggest shareholder, by the way.
Well, that says something, doesn't it?
Yeah.
Are they the Alan Gray of tomorrow? Because Alan Gray has for a long time dominated this space as the value manager.
Look,
or has that change
put
already
his
happened?
finger on it earlier. You're only as good as your current macro market call, and that can change. So what Coronation did right was that they got positive about mining shares in that period from 2005 to 2008. Then they got negative on those shares at exactly the right moment and transferred their love for the industrial and financials. So that, over the last decade, that one market call has just put you far and above everyone else. The trouble, of course, is that it's hard to do those kinds of things more than once in your life.
And I think it's getting more difficult. I think it's getting more difficult as well if you manage 400 or 500 billion rand. I think it's much easier when you do 100 or 200 billion. You can access smaller caps on the JSE and some of the smaller counters as well, so it gets a bit more difficult. But these things do go through cycles, and it's very interesting. I mean, at the moment, nobody wants to buy the Allen Gray funds, but I think if you see any kind of meltdown, the people will probably jump back to some of those funds again. But it is a cyclical business, and the value and the growth and the momentum, fund managers out there, certainly strategies differ over time.